Okay. All right. Let's see. All right. Colin has got a interesting question here. It's about the high pullback on Friday after the big move. Yes. Do I consider this big pullback and then today very little movement? Yes. Yeah, very well noticed. Yeah, in most markets, there are very little movements at the moment, and most markets to be what we should have been expecting. It's very, yes, yes, I would like to firstly welcome everyone and thank you for that question, Colin. And it is actually termed as a prolonged uncertainty on various markets, particularly the GBP paired instruments, okay, or any correlated GBP pairs, as what we've mentioned. I think it was last week on Monday, on the Monday live trade. They are currencies like the euro, the yen, the pound, as well as, let me see, the euro, the yen, the pound, as well as the CHF. Okay, and the Japanese yen too. So these are pairs that are selected by investors mostly, but it does actually depend on the timing as well. And you are right by saying that a lot of things are, in sort of a slow mode at the moment coming now, but also it's Monday and a lot of things have had happened more on the political and geopolitical fronts, because now, to summarize what have happened, we call it post-Brexit, is that we've got the euro. They're actually rushing the pound. They're rushing the UK to actually step up and speed up the process of following Article 50 and all that, to basically start the whole process of exiting fast. But but Britain came about saying that they will take their time and go step by step using the right procedures. But the euro, they don't actually want to buy. They don't want the UK to buy too much time, because more time means more uncertainty, and more uncertainty would actually lead to a bigger possibility or probability of a market collapse, you see. So that's why they're not, that's hence the reason we've got lots of uncertainty, but behind the scenes, they're actually planning a lot of things. Behind the scenes, the euro, they're actually coming up with a lot of sort of impromptu and lack decision-making type of decisions. Okay, if I may say so, it's a bit uncertain decisions as well, and it comes out, very fast, talking about Britain's political stand, immigration, migration, UK residents that are living in Europe, what they've got to do with their visas and everything. So a lot of things are in the jumble. It's not really decisions or on paper solid decisions that has been made. They are all issues that are actually coming up, and these are causing a lot more uncertainty among residents of the UK, living abroad in other European countries. They're also causing a lot of uncertainty for businesses, foreign businesses in the UK, and UK businesses in Europe, within the Eurozone. So because of all these, they are actually, there's a lot of pull out of investment as well. There's a lot of pull out of investment, okay, from the UK especially. So a lot of thing I would say, we call it in the financial markets, a lot of sideways uncertain market at the moment that is actually slowing down, but it's not actually slowing down because of lack participation. It's just actually slowing down to be more sure or certain of their decisions, and then you will see a bigger movement, perhaps middle of the week or something like that. Okay, so it's a lot of things have actually happened in the weekend as well from this very big move post Brexit. Okay, because we have got Moody, for example, the credit rating agency. They have actually cut UK's rating to negative. Okay, so that is actually bad for the economy. I mean, GDP as well, expectation has gone down. So in other words, all these political, economic numbers and predictions that are going on at the moment, they are actually giving more impact to the downside for the pound. But this is what I would like to remind most traders, is that despite all the GBP's position to the downside, you need to be very careful of which GBP instrument is paired with which other currency. For example, if the GBP is paired with the CHF or the Swiss franc, then it may be a total different turn. That means it would be more a buy position possibly. I mean, here we will actually look into the GBP CHF in a while. I'll open up the chart for that and I will show you what I mean. But because we need to actually be sensitive of the pairings, the pairs itself. So GBP versus Swiss franc, we need to talk about Switzerland's current decision by the SNB or the Switzerland National Bank, because they have actually because you know what happens now is that from pre-Brexit time, when they were making the decisions and all that, there were a lot of money flow investment going into safe havens, and one of it would be the CHF. So there's a lot of movement of assets and investment going into the CHF. So that has actually driven the CHF up. But the problem is that we've got the banks, the Central Bank of Switzerland, they need to be very careful, and they are very, very sensitive with inflation or the price going up, because that will actually impact their export big time. So they have announced as of Friday night or Saturday early morning that they would actually intervene or interfere, meaning that they would interfere in actually pulling the prices, pulling CHF rate down. So that means they want to control how much CHF would move up. So if you combine GBP and CHF, then you might see actually a potential move upwards instead of downwards. Now it's actually making that correction downwards, but we will look into the patterns in a while. But just for you to be careful with trading certain pairs, don't actually think that if GBP is on the downside, you could open all the GBP pairs and put a sell on all of them. You would need to be very careful, because each one of them has got the personalities of their own. Okay, so you would need to be careful. It doesn't work like that on all pairs. Majority of the pairs maybe, but not all the pairs. Okay, so let's look at very quickly, because it's post-Brexit time, we want to look at the GBP USD first. Give me a second, excuse me. Okay, sorry about that, just a drink of water. The GBP on the 1 hour chart, as you can see, I've applied the 50, 100 and 200 exponential moving averages, and as of now the price for, the GBP versus the dollar is trading at 1.3 to 3032 area. Okay, so the 1.3200, of course, it's a quite a significant psychological level as well. We need to look into that area later on. I would like to just reduce the size just a little bit there. As you can see, just from a naked trading's perspective, you could see that just by the angle itself, it's actually very much to the downside. It's very far away from the 3 exponential moving average on the 1 hour chart. Okay, with that you can see the split as well, the split of all 3 exponential moving averages. They are actually split open. They've got a distance between them that shows some clarity of the move or the direction of the move. Okay, and that is actually very close to 6 o'clock. It's more like a 5+ o'clock angle. It's actually on the way down. If we actually zoom in a little bit more, this is what we're looking at the moment. Give me a second, guys. I've got a question coming up. Hey there, Colin. Okay, another question by Colin. Do you think it will close the gap anytime soon when the pressure is to the downside? When you say close the gap, you're talking about the gap open on a Monday for a particular currency? Is that a GBP USD you're talking about, Colin? You're talking about that gap here, yeah? Okay, yes, there is a big possibility. Yes, there's a big possibility that it would do that. But with that as well, we want to look at the potential pattern as well, because here, for example, we have got a likelihood of this big move here. Whenever you look at big moves like this and it's actually straight down or straight up, it could well be forming the pole of a flag and pole pattern. So that could easily be the pole there. But the trick is usually if it's a pole downwards like that, then you want a corrective move to the upside like this, meaning that, you know, it would make a flag this way, and then once it breaks up, it breaks downwards and go as much or as many the pips that the pole has actually made. Okay, so but in this case there's a little bit of a tricky situation going on because we are looking at oops, give me a second, let me just erase old drawing. Okay, here for example we've got firstly look into the price, okay, and you could look at 1.3233 or so, and it's actually making a bit of a correction at the moment here. You want to look at this level here where price is actually trading based on this very fine you know, white gray horizontal line here that is pointing to 1.3228 now, and you want to actually follow that line and drag to your left and look to your left of whether or not, because here you've got a downward move and then you've got a correction. Okay, but that correction upwards didn't actually last very long, or it was not really a lot of move upwards, and then it got back down again. Okay, now as what Colin has mentioned, I agree, you've got a bit of a gap here. It might, you know, the thing is that how soon it would close the gap, we cannot actually really name, you know, really know that, because it could go as far down and then there's an expectation of a very big longish candle or move right up to close that gap. And also how far would it close that gap? Maybe just a little bit here, just as it closes the gap, or would it actually go over it? You know, that's the part that we don't know, but most likely it will close the gap. So we have got that. Now the thing is that if at all this move is making an up down move upwards, then that would be a good thing in a way to actually get ready for our downtrend move, because if at all it's making that up down move and it does create a sort of channel, what we want is for a successful pole flag pattern is to have a channel upwards. Okay, so that angle upwards is also very important. So I would think that this could be steeper and steeper upwards to go up, and then it would actually create a nice channel upwards. How nice that channel is, we don't actually know that as yet, because it's just too early at this stage. It's also a Monday, and there's a lot of you know, what happens is most investors, they stay out of a Monday, they look at the market, and usually the market is, you know, it's participated by retail, and the retail goes in and things like that, and only, you know, after the US Open or so that you can actually look at bigger participants coming in, getting ready for bigger moves and more solid moves starting from tomorrow, which is Tuesday onwards, and then it goes on Wednesday, Thursday. Usually Thursday would be the day that has got a larger average movement per pip for certain currencies. Okay, so that is what I'm expecting at the moment. If at all, yes, it would close up that gap, it would make a channel up. If it does make a channel upward move following that channel that I've just drawn, then it would be a better possibility, you know, for it to create a sort of up-down move within that channel that would actually be the flag of the flag and pole pattern, and then hopefully, you know, breaks or prefers the break downwards and create a bigger move downwards. So that would be a continuation of the bearishness for the pound. Okay, so this is what's going on. But again, this is a bit too soon for us to talk about the probable downward move straight away or big movements at the moment, because you see, you've got, let's say, that's actually picking up at the moment, okay, and you've got a price at 1.3225. Now that's quite close to the psychological numbers at the moment, so we want to look at appreciation of price to be above the 3230, and then going towards the 50 and go beyond the 50, then we could actually look at more prices up there. But you want to be aware that it might actually make that move upwards, close that gap, but not actually go too far up, because you have got the challenges or obstacles created by the 3 exponential moving averages too. Okay, so what you want to do at this stage is that if at all it's actually on the way upwards, you want to look to your left. Okay, you want to go onto the 4-hour chart and you want to go and look for any previous or historical move to the downside, or anything between this area. Let's say I just draw that randomly there so that I can look at whether or not there were any, if I drag to my left to look at whether or not there were any big significant moves around that area, okay, in the past. No matter how far back, it's okay, but that we would need to actually look at how significant or big that movement would be. That's the most important thing. That's the most important question to answer usually, okay? So you want to drag, and dragging it and dragging it, I don't actually see anything that, let me just do it this way. Okay, we're still looking at the GBP USD, but now on the daily chart, okay? I do see significant movement to the upside, okay, here, for example, right? We have got that area there now, quite close to the price, but has gone beyond the price. So I would like to look at, again, let me just look at whether or not we can find anything that is on the left. Okay, so just using this one here itself, this does look to me like prices now has gone lower than that line there, correct? That line is at roughly at 3649, so let's say it's 3650. Now 3650 is a very significant psychological level, and back in 2009, March 2009, that was a significant move upwards by the GBP versus the dollar, okay? But now we have got, as of price now, prices have actually gone under that level. So what does that mean? That means that we have got more takeover by the bears or the sellers. The sellers have actually taken over that zone that was previously monopolized by the buyers, and now it has been taken over by the sellers. So sellers are in control. You would need to ask yourself, who's in control at this moment of time? Okay, sellers or buyers? At this moment, it does actually look like sellers in some way, okay. It is more significant or clearer, as you can see. Yes, you got more sellers. If I take that off on the daily chart itself, now when you look into the daily chart, and the daily chart is showing you bigger, longish, more powerful candles, then that would actually sort of give you the hint that these people are the one who are in control. In this case, these are sellers. Okay, so as you can see, 3202 now, okay, it has gone very close to the 00 side number. So if it does go lower and go lower than 3190 and go lower, even lower, then it shows bigger control by the sellers. Okay, so if I go back to the 5-minute chart, as in now, then we could see that that's what's happening at the moment. There's some form of correction at the moment, but you have got some obstacle here, because it did go up and then it started to come up and didn't actually go through or pierce through the 50 all the way to the 100. So that's a little bit of a thing going on there at the moment. Okay, so it is actually trying. Now if you look into that area where the 50 is, you could see that it's at 13227, and that's actually quite close to the 20 site number. Okay, so that might just stay very close to the 3210 area, or something might just go up a little bit more. But this is what's happening as of now, meaning that it's a little bit of correction on the upside, but there are obstacles. There's still more strength to the downside. As I can see, there's this candle here. You can see that the body of this candle here on the 5-minute chart has actually covered that body on the left, that bullish candle on the left, and that does actually show some strength of the sellers taking control at this moment of time for the short term. Now if we go on to the 1 hour chart, again, if you zoom in, you could look at the behavior of candle itself, and let me just show you. Now you have got that, for example, you have got lots of selling power, as you can see. Okay, it's picking up at the moment. Now we need to actually look into how far the body of these bullish candles go. Okay, and there is a gap, as Colin has actually mentioned, so there are possibilities, a higher probability of it making that correction upwards, okay, to cover that area there. Now I will just go into the 4 hour chart for the GBP USD, and I'll just look at what we can gather here. Okay, as you can see, a lot of selling power, a lot of selling power at the moment. Okay, now if I grab that from the very top here and all the way down to this area here, you could actually see that the Fibonacci retracement, as I actually pull it here, would give some possibilities to the upside. But look at what happened when I've actually grabbed from the very top, from the high to the low. Let's say the low is here. Okay, you could see that if at all prices were to actually extend higher and higher, the area of where the 3 moving averages are very close to the 61.8, the 78.6 area that is right at the very top, but the 50, the 61.8 especially, look at how it is at that area. So if at all it were to make that sort of correction, you know, upwards, okay, it might just well play around this area, okay, which is very close to that, which is within the zone of 61.8%, and then make that down. Okay, but that is actually to the extent of how much it could actually make that upward move, but it may not actually make that far of a move, but that is what we don't actually know at this moment of time. So we have got that area zone here, which is very close to the 1.3855 area. So 1.3850, 1.3, okay, 850, all right, is your psych number, correct? So if at all prices did actually extend further, or just before 3850, it would have already covered that gap here. Okay, would have covered that gap here. So that is actually the short-term sort of possible or probable move that it might make, if at all the sellers are in control fully, that it might actually prevent prices for the GBP, for the pound versus the dollar, to actually extend much higher. But if at all there are strength or anything that is going to come in as news or fundamental factors that may actually push the GBP upwards, then it might actually go to this area here. So it will be between here and this area here, because we have got all these 3 moving averages as well. So my guess is, you know, based on what I can see here, it may make a bit of a move upwards, possibly just to close that gap, but then go closer to the 13850 area, perhaps even at 1.3840 or 3820 would still actually be covering that anyway. Okay, so 3520 is another level, okay, but that would be, you know, really close here. But if it does actually just go up just to close the gap and come down, it would actually be giving you a lot of hints that the sellers are very much in control. Okay, so if at all it goes, you know, further up, for example, the further it goes, I mean, towards the 61.8 area, then it would actually create an ABCD, a very nice ABCD, and then you've got a better, what do you call it, potential to go short. Okay, but try to look at the 1.3850 area, but if not, then slightly lower, but it might actually just try to extend at that area at 38, because as you can see, the 38.2 at least minimum is really close to the 38.55 and lower, of course, but because the 38.50 is a quite a significant site number there for the GBP USD. Okay, so this is for your GBP USD. I would like to just share with you a couple of things as well. Now, as I've mentioned earlier on, as of Sunday, they have actually cut the rates. Moody, the agency, have actually cut the rate for Britain. Okay, so that actually shows that economy is on the downside. A lot of negativity revolving the economy and the current status of the country. Okay, of the UK. All right, so that is one thing. The other thing as well is the EU leaders are pressurizing a lot of things. There's a lot of issues revolving trade. Okay, your trade agreements with the States, with France, with Germany, with the Eurozone. It's all coming to a big mess at the moment. I mean, you could literally, you know, listen to lots of news revolving trades and things like that. And one by one, they were actually, you know, coming up with a lot of negativity revolving what's going to happen. A lot of investors are questioning. We're talking about huge contracts and deals are put to hold, and they're actually suspended at the time and things like that. So a lot of problems are actually it's you know, it's going upon the UK at the moment. So that is giving us a lot of hints to the downside. But again, you need to be careful if it is with the CHF especially, but GBP in general, GBP USD and GBP pound, sorry, the pound yen and the pound CHF are amongst favorite pairs. So a lot of favorite pairs at the moment. Post-Brexit has got some favorite pairs. That would include the Euro CHF, the Euro JPY, okay, the GBP JPY, the GBP CHF, the GBP USD naturally, as well as the USD JPY. So these are pairs of favorites trading the post-Brexit at the moment by majority of investors. Okay, now I've got, hi there Veronica, how are you doing? How low could the GBP USD go, Veronica is asking. That's a good question. Let us actually take a look at that. Give me a second, let's see. I'll erase all the drawing. Now, this is the thing that you would need to actually wait till you look at the correction, and if at all, let's say, if at all it actually corrects to the 38.2, okay, then what you do is you pull your Fibonacci from here, pull your Fibonacci down here, okay, you pull your Fibonacci from A to B, correct? So we would like the price to first go up, okay, to around this area, or this area, or this area, but we would like to wait for it to go up to either one of this area, whether it's 38.2, 50% or 61.8, and make that correction down. Okay, once it make correction down either at the 38.2 or the 50% or the 61.8%, then what we can do is we can then pull your Fibonacci from this part B to C to measure how far would it go. So you would treat this exactly as an ABCD pattern. Okay, but to answer your question, Veronica, how far would it go? It could potentially go downwards after it make the correction as many pips as this pole here. Okay, so this pole from here to here, you could measure, give it a little bit of an estimate. Okay, I'll erase all that. Give me a second. In order to give you a bit of an estimate, you can literally go to this crosshair here, pull from the top. I may not pull from the top, I just want to pull from the body here to the body, just to give me a bit of an estimate. Now I take that middle. Now we're looking at the hourly 4, okay, so in the middle it's 1494, so you divide that by 2, I think it's about 150 pips or so. Okay, 1411 cannot be. It's actually more than that. It's actually 1,000 plus over pips. Okay, so all I can say is that if at all it ends up to be a flattened pole pattern, okay, then you could expect the movement down after it breaks out of that channel to actually be as many a pip as the pole of this whole pattern here. So this whole pattern here that you can see, this whole pole, that length of that pattern in number of pips, okay, could basically be your estimate of how far would it actually go. Okay, is that clear, Veronica? That's what we're waiting for at the moment, is to make that correction first. So it need to make the correction, meaning it need to make that upward move like this, okay, so that I can then make that upward move as a channel, okay, a channel up. And then when it breaks out of here, then from this point where it breaks, you can count in number of pips from here to here, and that will be equal from there to there. Okay, all right, is that clear? Yes, exactly. It's more or less like an ABCD. Yes, the only thing is, because it goes upward like that, and you don't know how far will it actually extend, and it may not be looking like a very clear ABCD, because that move, we don't know how far would it extend, to how many days and all that kind of thing, you see. So that's why. But yes, very close to ABCD, the AB equals CD. You're absolutely right. We call it the pole, you know, the upward pole there to the pole on the downward, on the downward side. Okay, Veronica, that's clear for you? Okay, all right, let me just proceed. Give me a second, guys. All right, so we're back to this again. So GBP USD, I hope it's clear for you guys. I mean, for me personally, I'm just waiting for that correction first, like what's happening now, 3244. Okay, I want it to go up a little bit more, so 3250 and above, crosses the side number, show me a little bit of upward move and create that channel up, and then I know that, you know, I would actually have better confidence in trading the pole and flag pattern. So if at all it failed, it's still, you know, we're going to go with the fundamentals. Fundamentals at the moment is actually showing loads of downside move, more and more uncertainty. So this is actually going to last for quite some time, because a lot of political agenda, a lot of things, a lot of rules, a lot of things going to be debated. It's actually a mess, a huge mess. So the bigger the mess is, the more sure we could be of a prolonged downward move, which is a good thing if you are on the short side for the GBP. Okay, so that's the trend at the moment. If we go on to longer trend, we can see it's quite clear, you know, on the downside, more very strong move to the downside, monopolized by bigger candle. You could see that happening on the various time frame, especially on longer time frame. You could see, look at this move here on the weekly or the monthly time frame, for example. They've got too many dominance by bearish candles, and you got bigger candle here, so that is just showing us a clear free fall for the GBP US dollar. Okay, so but you want to trade in stages. You want to actually take a look to your left, make sure you are actually well aware of the support resistant areas to your left. On top of that, you want to also be sure with the numbers, the psychological numbers on the right, the prices itself, looking into potential psychological levels. Okay, all right, guys. I want to share with you as well on the GBP CHF. Okay, if you've got no question on GBP US dollar, I'll just move on to the GBP CHF. So I've got GBP CHF here. I'll just take that away. Now we have got as of now, it's actually showing loads of downward move. You know, I've mentioned that the GBP CHF, we've got to be quite careful with it, because it might be on the upside as opposed to the downside, because of the CHF and the behavior of the CHF and the SNB, which is the Switzerland National Bank as well. So let's take a look at this one. Before that, I've got a question. Okay, Veronica, that's brilliant. Appreciate that. Thank you. Okay, so, okay, good. So we have got prices at the moment. I would always like to look at the prices first, just to make a sort of quick evaluation in terms of price action. Okay, you've got prices now at 1.2929. Now that is 2930. Okay, that's good. Now 30 is actually above the 20 side number by 10 pips. Okay, but it's also quite close. If it moves ahead and moves further up, it would be meeting the 50 side number as well. So you've got a bit of room there for an upside long short term, but you want to look into the trend per se. Okay, so we have got a lot of information at the moment as of market open today. A lot of stock and futures and Nasdaq and everything else has actually fallen as of Friday closing. We are still looking at loads and loads of down, 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 a lot of sell-off. We are talking about sell-off market at the moment, but you would need to be very careful with where investors are putting their money in terms of safe havens. Okay, now in terms of fundamentals, in terms of how big investors are trading, because of the Brexit, because of the nature of Brexit and how it's impacting the global markets, investors at the moment are actually avoiding, listen to this very carefully, avoiding trading currencies that connects to commodity currencies or connects to commodities. For example, commodity currencies are the CAD, okay, are the NZD New Zealand dollar, CAD is Canadian dollar, NZD New Zealand dollar, as well as the Australian dollar. They are also avoiding, for those of you guys who are in Africa, okay, they're also avoiding ZAR, Z-A-R, the South African rand, because these currencies are called COMDOLs, or commodity currencies that are correlated with commodities, precious metal and things like that. So they're avoiding that because of the mechanism of the trades. It poses a lot of risk for big investors, so they're avoiding it. Now, coincidentally, I have looked into various areas, sourcing best currencies to trade if you are trading the currencies, and as I've mentioned, is the GBP CHF, Euro CHF, and with CHF type currencies, including also would include the Euro USD, of course, the majors as well, they are good, but the one that would actually be giving, I would say, significant returns and looking at more volatility as well are pairs like the GBP versus the CHF, for example. So here we are on a Monday at the moment, okay, and we're looking at GBP CHF 1 hour chart, and we're looking at a potential upward move here which hasn't even begun so much. You have seen that it's moving really slow, and as what some of you guys have said, especially Colin have mentioned today, it's really moving really slow, but it doesn't mean that it's really slow and nothing behind the curtains are going on. There are definitely some things that would actually surprise the market altogether, because there's a lot of mechanism, a lot of things needs adjustment inside the mechanism of the bank, as well as the adjustment to the monetary policy itself. Okay, so they have to play a lot with how much money they're going to lend the bank, how much money to create, how do they actually have to put money into the market, have to pump in money supply or not, and things like that. So it has a lot to do with two things. It has a lot to do with inflation, deflation, and all these kind of things, as well as interest rates. Okay, so you would need to actually look into this and always try to have a sensitive ear, or be very aware of when they actually talk about a country, whether they are going into deflation or disinflation. You can always type this into Google and read the definition a little bit, but not to dig deep into it too much, okay? Because you would need to actually know, for example, if the country is going through inflation, deflation, excuse me, or recession. Now at the moment what is happening is they are suspecting the UK to show signs of early recession. Okay, recession, if they go in a bit more and then it becomes serious recession, then it becomes a financial collapse. Okay, a financial crisis. So that is why we're looking into quite a big chunk of sell-offs going on for the pound. Okay, so this is why we want to actually be very careful in trading. Okay, but here for the GBP CHF, you can actually look into what's going on here. We've got a price at 2926, for example. Okay, it's not gone beyond the 30 yet, so it's trying to pick up, but there may be some opportunity for you to buy the GBP CHF, not to actually sell them, but you want to always be looking at levels to your left. Now, for example, we have a level that market has opened here. okay, at 1.3008, let's say, okay. So we know that that is really close to the 3000 or 00 site number there. Why did I choose that level there? Because this is where market opened and went upwards, so that has created a sort of strong support area here. Of course, if you want a support resistant level, you want to make it a zone. So you want to actually, because you're actually doing based on that long candle there, you want to take the wick of that candle there. So what that means is that I've got a zone now between 3008, 1.3008 to 1.2963, more or less, okay, 1.2963. Now I would like candles, if at all the GBP CHF is going to give me a long opportunity, I would like prices to first pierce through this zone and then go upwards. So once prices has gone 1.3000 and above, or so, let's say 3010 or 3030 and above, then I have got more chances to look at it playing above this area, which gives me a good bullish area potentially, okay. But we need to look at the prices piercing it through first, because now we're just listening or hearing market gossip saying that the GBP may be the pair, GBP CHF may be a pair where we're looking into more upward move because of the intervention by the Switzerland bank. That means it's trying to pull the CHF down because it's trying to control inflation, you see. So a country like Switzerland, they have to control inflation. Okay, it cannot go too high. The price, the CHF cannot go too high. If it does go high, it would then impact the economy, the Switzerland exports big time, because Switzerland is very reliant on exports. Okay, they're very reliant, a bit too reliant on exports. Very small country. It's got the least sort of natural resources and everything else. So it does actually depend a lot on its EU partners, countries like Germany, UK, and all other countries as well, to actually sell its services, its products, and all kind of stuff. Okay, so they do have to be very, very sensitive with that. So that's why we need to look at, okay, if the rumors are true, we need to first confirm with what we look into the chart with price action as well. So I would like you to be aware of that situation, of that potential trade to the upside of GBP CHF, but not just yet, because it might not even happen today. Might actually happen today, might happen next week, might happen at the end of this week. So in order for us to be sure, we need prices to go through that zone first. Okay, now once it goes through that zone, you know, we can then go to daily chart. We can then look, you know, within this area whether we have any challenges for a huge or significant resistant area, you know, then we can plan ahead better. Okay, so if I pull this one here, give me a second. If I pull that one all the way back, I know that I have got, you know, support. That's a strong support area. Okay, that zone there. Hence the reason, if prices have gone through and being pushed through by a longish or a lot of bullishness is showing, then we've got more possibility for it to go up, because that's what happened. A huge fall followed by, this is where that huge fall have stopped. It has stopped there. So it has been stopped by significant buying power. So this is where buying power has occurred in the past. So it may occur again, because history does repeat in this sense, where it might actually start to have a platform to buy again, similar to where it had actually begun to push upwards. Okay, so there you go. Now this is again a very long bullish candle here, which actually went through that zone as well. So I'm just looking at the behavior of candles close to that area that which I have drawn there, and you can see again a lot of push upwards. It went up from here, correct itself, created some buying power again. Okay, so that zone that I've drawn between 12963 and 13008 is indeed a very significant zone. Okay, so if I adjust that zone a little bit, pull it a little bit down here, because that's where it started. Okay, that's where that bullish candle started, went upwards. And then I could see that it becomes more accurate, meaning that I've got some candles creating all that support and stuff like that here. If I pull that a little bit more, I got some long candles penetrating through that zone, long candle here, very long candle right there. If I go back again to the right, let's see, to the right, there's nothing much I could see there. Then, only then I stop going further, and I know that that level there has been drawn carefully. I've actually looked into all various areas, and there you go. And once I've done that in the past, and when I look at what's happening now at as the current situation, or what's happening now, you could see that that's where it started. It stopped there, the body there, and you could see that it's playing in within that 1.2905 area, okay, and the body is trying to rest onto that support. So hopefully, you know, it's not going to go through. If it does go through that, then what that would mean is that you've got more selling power that has taken over the buying. Okay, so that's what it means. So that's basically it. This is where you've got to wait and look at it. If you're following market gossip, you're looking at trading opportunities for the GBP CHF on the buy side, you want to wait till prices go above 1.3010, 1.3030 would be better, and then shoot upwards, then you can actually start your long position. Okay, right. Now, any questions on GBP CHF at all? I mean, here I have not drawn any pattern because there are no clear patterns that are totally visible or high probability, so I'm just using price action at the moment. When I go onto the 30 minutes chart, it's still trying its best to penetrate through, going under, but still hasn't actually happened. If I go onto my 5 minutes chart, let's see what's going on, and you can see that it's still trying there, and you can see the shape of this as well. Look, it's making that turn around like a U-turn going upwards. So what does that do? That actually tells us that it's got a bit of a shift of focus to the buying side, to the buyer's power as opposed to the sellers. It's trying to, but again, it's quite far away on the 5 minute chart here based on this line. So again, it may be creating some support. Okay, so we go on to the 1 hour chart. There we go. We could see that on the 1 hour chart, it's a bit of a different thing. It's actually picking up. It's making that as a base of its support. It might go up, but we want to wait until it goes through and goes above the 3008 number. Okay, on the daily chart, of course, you could see some rest there. The candle suddenly shortened a little bit and it started to rest there. So there are reasons to believe that this could be a significant support area. So let's wait and see until we see further support, and then we start longing it only at 3030 area and above. Okay, now I've got questions. Veronica, how long could it go should that happen? Veronica, you would need to actually look into what I have just said here. If at all, if it actually goes, we are now waiting until for GBP CHF, we're not talking about a very clear downtrend, because the GBP CHF would work very differently with the other pair. It might be giving us buying opportunity instead of a selling opportunity, but I want that to only be confirmed once we have a bullish candle going above this area 30030 or 3030 and above. Then this might be a buying opportunity. It might be a selling opportunity for all the other ones, the other GBP, USD, GBP, JPY, and all the other pairs, okay? But specifically special for the GBP CHF, it might be. I'm not sure myself. I cannot see until I confirm everything, but we need to confirm it together by looking onto the chart. Only after it goes above this one, it might surprise the market, should always surprise the traders itself, because most traders, what they do is that they think that GBP is on the downside very, very low, so they start selling all the GBP pairs. So they open GBP JPY, they sell, GBP CHF, they sell, GBP USD, they sell. So that shouldn't be the way that we should be So we need to know, in this case, GBP CHF, CHF's personality at the moment is that the country is trying to pull the CHF currency down because it has gone too high up already, so it's going down. So if CHF is going down and they're trying, and the bank is intervening, or the bank is actually interfering, then the bank's power will cause the CHF to go down further and make the GBP rise. So in this case, GBP is for a Hi there guys, I'm back. I think I'm not sure what happened. Thank you for reminding me. Can you guys hear me now? Okay, I think mistakenly there's happened to be some sound. Okay, Masidi. Yes, I'll answer your question. Give me 2 seconds. Okay, let's see. Masidi's question is, since most GB pairs are projected to go down compared to GBP CHF, does that mean we cannot trade the correction before? No, it does not mean that at all. Yeah, no, your question makes perfect sense. You can actually trade whether it's a continuation or a correction of trend. That's not a problem at all. It should be it should be entirely your decision to make, but you would need to be very careful, okay? Because trading the trend in a situation like Brexit, after the Brexit, you have got more how you say, opportunity to the downside. Now that opportunity to the downside is actually created by the strength of the trend as well to the downside, you see. So the trend to the downside would actually encourage you to be sort of a how you call that, lower risk sort of trading, even though it's still risky, of course, but it's a lower risk compared to trading the correction. Okay, because all of a sudden the correction itself, the correction is a double-edged sword as well. It might actually give you biggish correction, and you may be, you know, exiting in time and things like that. But I, for example, would prefer to trade the continuation of trend as opposed to the correction. Okay, it does actually depend how you wish to trade that. If at all you're trading correction, you know, all good with that, not a problem, but try to be really aware of the psychological level and your support resistant areas, because these are always sort of very important area that has been priced in by investors, by big movements and things like that. So you want to always look at the prices and never to enter your trade too close to the 00, 20, 50 or 80 psychological number. That means the last two digits shouldn't be 20, 00, 50 or 80. Okay, if you want to buy, you need to buy above 10 pips above that level. If you want to sell, you need to sell 10 pips below that level, because these levels I've just mentioned, when the last two digits of the price, we take it as 4 decimal places. So ignore the fifth one, and the last two digits of the 4 decimal places of the price that you see. For example, like now it is 12904, for example. So 04 is your 0405 is your psychological number. Now 0405 is too close to the 00. Okay, so you don't want to trade. You want to trade at least 10 pips above the psych number or 10 pips below. So there are 4 sets of psychological levels. You got a 00, 20, 50, and 80. Okay, so yes, you can always take profit or stop loss as well, very accordingly to your psych numbers. Your psych numbers, if you look at your previous trades, and let's say you print out your trade history and you focus on all your losing trades or all the trades that you have lost, okay, you could you try to make an evaluation and look at whether or not you have entered or applied the take profit or the stop losses. Were they very close or too close or on the dot of the psych numbers? Were they on the dot of the 50? Were they on the dot of the 00, 20, or 80? Okay, so these are important areas that you would need to look at, and you can easily apply this, especially at this time of trade with the pro-Brexit, the post-Brexit. Okay, because it is highly crucial. Very, very important. Like as of now, this is the price here. I would like prices to go up more and maybe take the buyer order for GBP CHF, but I would need prices to go beyond above 1.3000. So 1.3000, the 00 at the end, the last 2 digits, will be one of the psychological levels. So if I want to buy, I need to buy 10 pips above the psych number, which is 3010. But it's not only about buying, it's also about the behavior of traders and investors. If they go beyond the 00 and above, let's say they go above to 3030, that means it's above 2 psych numbers. It's above the 00 and it's also above the 20, then you are looking at more buying power automatically, okay, because they have gone beyond these psychological levels as well. So this is really crucial. I actually look into psychological level a lot. I look at patterns a lot, but I look at the psychological levels, and I also plot out exactly like what I've done just now on the support resistance as well. Okay, the zone, very important. You want to look left, you want to look at behavior of candles that have reacted in the past as well. Okay, so that's basically it for the GBP CHF. What's going on with the USD CHF? For some of you guys have actually are actually in the trade with the USD CHF. Let's say you want to actually look at, again, first step could always be just to look at the price first, and I can see the price straight away, 0.9774. so 0.9774 or 73 or 74 is the last 2 digits. Now 73, if you add 7 pips above, if it's going upwards, the closest psychological level is the 80. So maybe when it was going up, it was actually trying to weaken very close to the psych number 80. So when it went up here, this bullish candle, the wick of the bullish candle is at 9786. As you can see, it is just within that 10 pips sort of window of the 80 psych number. Okay, so if I would like to know where the prices would actually go up a little bit more, I would need to wait till price go up at least 10 pips above the 9780, like 9790. So the price as of now didn't do that, didn't actually go past 9790 and go above and go past 9800 and then go above. It didn't do that, right? So it actually turned around and go down, start going downwards very close to the 9780 area. As you can see, that's what happened at 9781. It started to depreciate the value. So this gives me a hint that the bears may be coming back a little bit and trying to overcome the situation and outbeat the buyers. Okay, so when you look left, for example, you can see that there's a lot of resistance in this area. Okay, if I take that, for example, this group of candles here, based on that candle that I've pointed there, that bearish candle, I want to put the red line horizontal right on its body, and I want to put another line right on its wick, and I've got that zone of resistance there. Okay, so as you can see, prices just hasn't really made this area a support support, but you have got a little bit of buying sentiment going on for USD CHF. So here itself is telling me that there is this buyer, there are buyers who have tried, and I think they have succeeded a little bit in going, how do you call that, overcoming or being in control as buyers. So the USD is picking up at the moment, okay? You've got this one little hint here. Okay, so but what we need now is for more buying signal to go above and go beyond 9780 and go beyond even higher and go beyond 0.9800 and further. If it does, that actually would show that the buyers have taken over that selling zone, because this is quite a significant selling zone here. Okay, so as you can see now, live market, you could see that there's a pickup of buyer almost immediately. You could see. Can you see that candle there? So that shows me, yes, a bigger likelihood of prices going upwards. Now, if at all we look at more and more action to the upside for USD versus CHF, then what you can then do is to pull that one right up there, and that could be your AB move. Okay, so you've got a sort of an ABCD pattern going on here. So that's your BC. Okay, so if I pull this one down a little bit, okay, let's just do on the on the 4-hour chart. It's a bit clearer, and I'll just, yeah. Okay, so I've got a pattern like that, for example. So if I take that AB equals CD, just to pull that down a bit. So that is the potential of where prices could go potentially, if at all that that uptrend persists. Okay, so I've got an ABCD pattern drawn up now. There we go. Simple. All right. Now, where would I actually enter that USD CHF on the buy side? I would actually look into here. Right, so there you go. Now on the fundamentals for the USD, for example, for the US, what's happening now is you've got a lot of selling power, correct, for the GBP, for the yen, for a lot of things, a lot of other currencies. Now that movement of retrieve or sell off of pound and all other currencies are actually still making the dollar an attractive safe haven. So what is actually happening is that you have got a transfer of wealth or transfer of funds going into the US investment. So that is actually pushing prices up. It is not always a good thing for the US themselves, because the export prices will become, their prices will be too expensive to sell or to export. So that would again, in time to come, impact their economy again. Okay, because not enough money coming in, the trades are not going very well because too expensive, the dollar is too high. But this is actually a sort of catch-22 situation that the US is actually in, because now you've got a lot of investment going in. That's what's pushing the prices up. So this might actually be a sort of confirmation that on the fundamental side, the dollar might rise even more. As you can see, prices and the live market now is actually just going up for the dollar. Okay, so potentially it might go up to the 9930 area, which is above the 20. So to be safe, if you are at all selling at this area at 9777, let's say, or you want to trade at 9790 because it's above the 80, then you can actually take your profit below 9920, because 20 is your side number. 20 is somewhere down there, 9920. So 9910 would be your ideal take profit area for the dollar. Okay, you would need to first confirm the trend, of course, as usual. Put in your 50, 100 and 200 moving averages and compare your 1 hour, 4 hour and daily. But for the fundamental side of it, yes, there are more room to the upside for the dollar, because you are talking about a transfer of wealth from people who are selling and selling all the other ones. They're actually still looking at the dollar for reinvestment, for investment into the safe havens style investment. Okay, so that's basically it. Now a lot of people also ask, what about the USD JPY? I mean, why is it that again here there is a difference to the USD JPY? Why is it here it's on the downside? Okay, now here it's on the downside because of the yen. Now the problem with the yen is that yen is people, if I mention it to you, I hope you remember last week we talked about how the mechanics of the yen works, and a lot of people are doing carry trading, so they are actually buying the yen. So so in this case with the USD JPY, again, personality of pairs, very important, doesn't work all the time. USD goes up, then you can go and buy all the pairs that concerns USD. No, it doesn't work like that at all in Forex, okay? You need to be very careful with what you're trading and how you're trading them. Now in this case USD JPY is actually experiencing carry trading, so still people are putting like the dollar, putting money into the yen, but they are carry trading, meaning that they are buying the yen, they are selling off the yen from their buy trades, but then they've been buying and buying lots of yen. That has actually pushed appreciate the price of yen as well. Okay, so in this case for USD JPY, perhaps on the downside as opposed to the upside. All right. Okay, so because if you actually pull your Fibonacci for the USD JPY from there right to there, you could see that it corrected there the 50. Okay, so you can pull from the B to C to go down to the 200 area because of the ABCD style trading. Okay, so that is basically your yen. But again, here some may be confused of how you trade this based on psychological number. Same thing, same principle. You can look at the after the decimal point, you could see 56. 56 is your site number. Okay, ignore the last one, ignore the third one there in the back, just take the 56. So 56, 57, that's the 50 site number. And now in order for you to know whether prices would actually go down further, you need to wait until price go below the 50 site number. So it has to go below, go lower and lower, and go close to 101.40. Below 40, then you could actually look into more price action to the downside. Then you can say, okay, now USD JPY looks like the bears or the sellers are in control. Again, you would need to go and apply your 50, 100, 200, make sure of the trend first, and go and compare it to the 1 hour, 4 hour, and daily chart to make sure that all three time frames matches, telling you that most candles are actually at a bear type of zone, meaning under all three moving averages as well. Okay, so I'm moving on to the gold as well as of now. Now, still, prices for gold, it is still wishy-washy, meaning that people, there are people who are trying to pull prices down for gold even more and make it struggle a bit more. But as of now, I would see it as more, from the fundamental aspect of things, I think there are more move to the downside. May not be too much of a move, but it does actually depend on the dollar, because a lot of investment, as I've mentioned before, is still going into the dollar with all the things are falling, sell-off, so it is more on a risk-on market for the dollar, actually a risk-off market, so people are actually investing in precious metal, still investing in all the safe haven. So USD is safe haven, still yen safe haven, and at the moment, that would actually encourage gold to not move up too fast too soon, okay, too soon too much, but to actually eventually move up, but not just yet, okay, because because it's playing a limbo between the dollar and gold at the moment. So if US dollar is expected to be on the upside due to the investment pouring in because it's seen as a safe haven, then you're looking at corrective moves for the gold as of now. Okay, but again, you've got still a lot of power on the upside because you have got a lot of higher lows and higher lows, and that is still looking but unpredictable in a way. As you can see from that move, you've got a long candle here, you've got more bearish candle there, again more bearish candle there. So that is telling us what? That's telling us a little bit more participation by the sellers as opposed to the buyers as of now. Okay, so if I go on to that and then look into that, that is pointing way up to a nice angle, okay, on the 1 hour chart. let's look at this. I don't see the other lines. That's okay. I've only got a 200 here, so let me do the moving average. Give me a second, guys. Okay, let's go to the 50. All right, there you go, 50, and then the 100 as well. Okay, there we go. So 50, 100, 200, way up on the 4 hour, on the daily, on the 1 hour, on the daily, all of them. It's still showing loads and loads of room to the upside. Nice angle as well, and that's a nice pickup. That didn't really happen. That pattern sort of fell, that Z-like pattern, due to huge volatility caused by the Brexit and that event on its own. So a lot of patterns might not actually work, but in terms of direction, it is still projected to the upside. So it's a good news still for me in terms of the dollar, because we're still, you know, nothing has actually changed in the analysis that was given since a couple of months back. It is still looking like there are more room for the upside for gold, but it is actually, you know, correcting itself, trying to play around the moving averages as well. But now it's giving you a nice angle to the upside. But playing with what dollar is giving, it may be a bit, you know, correcting a little bit before it gives you more opportunities to the upside. Okay, that is almost happening with silver as well. But if we're looking at gold, at oil, you're looking at more pressure to the downside, as we could see easily at the 1 hour, 4 hour as well. More dominant candles to the downside. But when looking at the daily chart, there seems to be a bit of a support, but that is actually sort of penetrating through. Prices itself for oil, you can actually use psychological number as well, 46.58 now, 59. The 0.58, you make that as your last two psych number or psych level. So under that number, under 50, that means like 40. So 46.40 might give you, if prices does reach 46.40 and it start to really show you more room to the downside, then you could then expect more room to the downside, okay, because of the price itself. All right, but at the moment it's still playing. It's playing at 50 and then it's trying to find support at the 50 moving average here. So it's actually a very dangerous time to actually trade because it's too close to the psych number. On the 46 itself, it's already, you know, under the 50 but not too low the 50. So that is again another challenge for the psych level. Okay. We've covered that. For those who are looking into the AUD US dollar, we have got, now I'm looking at the daily chart. So we did see prices followed very nicely the Z pattern, correct itself at the 50 exactly there and then downwards. Okay, so that has already happened. Now they've got an A, B, C, D that have actually happened as well. If I take that away, look at this. From here to here, that could be an ABCD of this new pattern here. And as you can see, it actually simply corrected itself there. Okay, so as an ABCD, it started off with a Z-like pattern. All that has finished in a way. So I'm going to move that here. Oops. Okay, why? Because I would like to make that look to me like a potential W-like pattern. Hence the reason it was actually, you know, A, B, C, D, A, X, A, B, C, D. That's your normal ABCD pattern followed by an X to A move, and it did correct itself there. As you can see, prices went down more. So that was a W-like pattern there. Okay. So that's basically it. All right. Now, have you guys got any questions for me? I mean, it's close to the time to actually wrap up at the moment. So if you guys have got no questions at all, then I would wrap this up. If not, then let's see what your questions are and we can take it from there. Okay. Wait for a couple of seconds or minutes just to see whether you've got any questions or any pairs you would wish for me to cover, and and then we could do that. Okay guys, so no questions at all for me? Very clear with your trades at the moment? Okay, that's good. It's a good sign if you guys are clear with the directions and especially for the trades that you're doing. Okay, this is for the gold. That pattern sort of failed, but for the gold, it might actually extend further. The Z pattern might actually not fail, but extend further, meaning if I pull that one downwards, I could see that it could extend till the 200 or the 224 area. So still nothing has actually failed 100%. Might just, the pattern potentially just got bigger, the Z pattern. Okay, so it's giving some room to the upside, but still I'm expecting some form of correction coming downwards. So yes, that might go upwards here. Okay, on the 1337 may cross that line if the bulls are persisting, and it might go close to 1372 area and then come down. But we don't actually know that. They might just come down from this angle. We will need to wait for the price, need for candles to pass through and show us some bullish momentum. If not gone through that 1337, then it might just start to fall again. Okay, all right, good question. For Masadi, USD CAD identified a W pattern, says Masadi, and is it likely to fall? Let's take a look at USD CAD then. Let's go to USD CAD. Give me a second. All right. Let's look at USD CAD. All right, let's see. Now, prices, where is it at the moment? Now, we're at a daily chart, but let's look at it on the 1 hour chart first. Okay, now it shows some very bullish movement. I've got the three prices at the three moving averages splitting open, pointing upwards. We have got strength to the upside. It's quite far away as well from all these lines, and it's showing a lot of bullish momentum there. Look at the price itself. The price is showing me that yes, there are indeed a lot of bullish momentum. Okay, it has number one reason is at 1.3061, meaning that it has actually gone beyond the 50 psych number, so that gives us a lot of hint, okay, that it has actually gone over that psych level. Okay, but I would still wait for it to go beyond the 80 as well. Let us see whether it would go beyond the 80. Why? Because if you look into the past, if you look to your left, okay, look at your left, this is a significant resistant area, and then you look to your left again you've got a resistant area. So what I would say is I would look into this one, because this one here, prices went up and then it made a big fall all the way down here, correct? So that is actually quite a significant move. So that significant move is actually very, very important. It's telling me that this area, that area, and more areas within that zone would make out a very significant resistant area. So let's draw a resistant, support resistance zone here. Okay, meaning I'll take this area here, I'll use this candle here, that bearish candle body, and then I'll make another zone based on the wick here. So this itself gives me a hint telling me that okay, if at all price were to pick up USD CAD to go up more, I want it to penetrate through with a big bullish candle or showing me more strength by the bulls or by the buyers to go through. As you can see, it is actually showing some bullish momentum, okay, but would it actually go through and go above 3086? Now 3086, as I've marked here, is above the site number of 80, but I would like to see prices go beyond 1.3090, above this line, and go a bit more above 90 to show me that there are more room to the upside by the US dollar versus the CAD. Okay, because this is what we want to look at. Yes, there are more bullishness and all that, but now prices are trading at this zone, in between the zones, so things are not decided very freely as yet. The bulls or the buyers are trying to dominate, but not 100% as yet, because it's in within this zone. If you pull this zone, okay, you can see that there's a lot of selling power in this zone. This zone, it's like an area that a lot of big sellers have dominated. So I want this current candle to dominate as well. Only after it goes through this zone, go above that zone, then you can say that now the buyers have taken over. At this stage, still a little bit too early, not too early, but a little early for us to know. Let's just wait a bit more until prices go above that 3086. Go above 1.3090, even better, giving us more chances to believe for more room to the upside for USD versus the CAD. Okay, so if I go on to the 4-hour chart, again you can see very clear. Look at that, right up there, stop, went up there, came down, made a turn, again came down. So there's a lot of resistance here, a lot of selling here going on, but let's wait. Now it's showing that it's trying to do it. Let's wait. Once it's done it, go above, then we've got more chance to believe that it would actually go down, go up much more, okay? But we'll just wait for that first. On the daily chart, okay? Hence the reason it's stopping, it's playing around a little bit with the price, because you have got a 200 moving average there as well. Not only the zone, but a 200. But there's a lot of resistance in that area too, but you have, once prices has gone above what I've mentioned, 3090, and even more, even higher than this 200 and above, then you've got loads of room to go up. Okay, then if that does happen to go upwards, what you can then do is treat this movement here as a potential ABCD pattern. So you have got a likelihood or a potential for it to go at 3.3. That's 300 over pips, 200 plus almost 300 over pips. Okay, so there you go. 200 plus pips, almost 300. But of course, once you treat that as a ABCD, you would need for it to pass through all the obstacles that I've mentioned earlier on, pass through that zone, and then go above the 200 moving average. Only then would it then give you some hint to go up even more. Okay, so where do you actually start buying? You would start buying only above the cross, okay, above this zigzag here. It's already past that, so it's a good sign, but then you want to lower your risk, so you want prices to first go above that line above that. You've got some pips to make. Okay, that's a good number of pips, but 3090, or better still 3110 to be your buying area, and then you can take profit at 3370 if you want, but take it in stages, 50 to 80 pips, 50 to 80 pips. As it goes up, make the correction, start to go up, you buy the dip, and then you go in stages. Okay, all right, I think I've got some more questions. Okay, Masidi, that's brilliant. Okay guys, I think that's all for now. I've got to wrap up now. So what I'll do is I'll firstly say a big thank you to you guys for attending my webinar live today, and I would like to see you again perhaps on Wednesday, when you guys are going to join me on Wednesdays for live account holders. Of of course, you can join me on Wednesday, day after tomorrow. And if not, then see you again next Monday. Okay. Meantime, send me an email with any questions you've got at kenny@orbex.com. Okay, guys, is that all right? Let me see. I think I've got some question here. Oops. All right. Thank you, guys. Thank you, Aurabla. Okay. Have a good evening. Thank you again. Thank you once again, and see you soon. Okay. Bye-bye.